Welcome back to the next episode of Mortgage People. I'm joined, as always, by Vaughan Zawadzki and our special co-host, Shakila Kunabalasingam. And this week, we're talking inflation is getting cool, like the weather, and what's going to happen next with the Bank of Canada's next meeting. Join us and find out next. Thanks for joining, Vaughan, as always, and special guest Shakila. Thanks for stepping in for Kristen on short notice as well. So glad
My pleasure.
to have you in here. So big news this week was the inflation numbers came out way cooler than what we expected, down at 1.65. It was one of those moments where like, wow, I can't believe it's that low. I actually heard rumors it might be even a little higher than what they're predicting. It was 2% last month. People were even saying maybe 2.1. So coming in at 1.65, couldn't believe it. Vaughan, what was your reaction? Were you as floored as I was, or is just me?
Well, I've been reading some headlines that were like suggesting that interest rates may yo-yo a little bit down and up until we, hit where we're, comfortable being. But with that said, with the interest rate announcement, I think Benjamin Tal had said like we are way ahead of our inflation anyway. He said like we waited way too long to start, cooling it off or to waited way too long to make a rate cut, right? So based on his predictions, yeah, that is sort of, it's not really surprising. And based on those headlines, sort of fear-mongering that interest rates may go back up, I think that we're on the steady decline that we predicted. The only thing that really troubles me is the employment numbers seem to be creeping back up. I mean, we want higher employment. Like here we are, like we're always cheering for the economy to tank so that interest rates will go with it. It's a tough balance.
Well, and, Shakila and I were at an event yesterday and, that headline was announced at inflation was at 1.65 and a room, 600, 700 people, everybody cheered. Shakila, what was your reaction to that?
I mean, I was expecting it because I think we're all kind of have been waiting for it. But I wonder like if everybody knows what that means. Because yes, I think everybody thinks that rates are going to, immediately drop. But I think we need to set certain expectation. It's going to be a gradual process. So I think all the excitement in the room was more, about rates dropping. But I don't think it's going to be an immediate effect. I think Bank of Canada is going to look at maybe cutting 0.5 next week. But again, I think it's all going to be gradual. I don't think we're going to see an instant impact of, everybody celebrating and buying.
Right. Yeah. Well, I mean, that leads to my next question, which is the Bank of Canada prediction, right? Like their, headline inflation's down, job numbers are up.
Job numbers, let me just say that the job numbers only came up 10 basis points. It went from like 6.5 to 6.6. And so the headline was like, "Oh, job numbers are up." I'm like, what does this really represent?
Well, the number of people getting hired was higher than what they predicted, right? But it's still not growing as fast as the population is growing. The workforce is growing faster than the number of jobs, but they were expecting a lower number to that. So it's got even that number is shrouded in, well, is that good or bad, right? Like it's higher than we were expecting.
I wonder if it's like just a one-off.
Yeah.
I don't know. I don't know if that's the direction we're going, but I'm assuming it may be a one-off, but it'd be surprising to see it kind of continue to climb up faster.
And that's true. It's like, is measuring employment numbers month over month, is that even a good way of measuring employment? Like maybe, a 4-month or a 6-month snapshot might actually be a more accurate. It's like stepping on the bathroom scale every single morning. It's like, are you really
losing weight?
Yeah. Is it up and down overnight based on how much salt you had the day before? Like, yeah.
No, I agree.
But that's the yo-yo, right? As you said before, right? So how much how much am I going to eat the day before, and then I gain weight and I feel terrible about myself, or do I eat less and I am down, where
Is
I
it
just
a
maybe
good
didn't
way of
drink as much
measuring
water.
employment?
Yeah.
But
Yeah.
that's pretty hilarious that people are cheering for inflation numbers. And, like, I think we've all been in this business a long time. And the conference that these guys went to yesterday was primarily focused on real estate. So it was full of real estate agents. And I'm thinking, like, we got to get these people back to work, right? If all the real estate agents in this city are watching inflation numbers, we got a problem here.
Knows that lower inflation means that there's a bigger chance that the Bank of Canada will cut rates, and that will mean that lower rates mean that people can afford more, and they will continue then to buy, and then real estate agents will get back to work. But at the same time, it means that the economy isn't growing as quickly. People have less confidence in the economy. People are spending less. So overall, not great news for the economy, but maybe the direction that we have to go.
So what are we thinking?
The Bank of
50 basis
Canada,
points all around?
yeah.
Or?
So the odds right now, and this is hot off the press from this morning, the odds of a Bank of Canada rate cut of 50 basis points currently is 73%, which is and 25 basis points. The chance of that is only 27%. You're saying there's a chance here.
What about 75 basis points? Like,
you know
where's
what?
the appetite for a real movement here?
Yeah, I think give it a few days, and we're probably going to be at 0.75, depending on how market is moving. Yeah, I wouldn't be surprised,
Yeah.
but I think 0.5. I think a lot of people were rooting for 0.25, like that's more, to happen. But I think 0.5 is like, I think I can very much see that happen. And I wouldn't be surprised if there's a 0.75, depending on what
So you're saying 0.75 next week?
I mean, we live in
write that
Canada.
down,
Anything
Shakila?
is possible. But I
Heard it
think
here first.
0.5
Shakila's
for sure.
calling for 0.75.
You know what? I'm going to second that. I'm going to back that one up. Let's go.
Yes,
I've been
Bonnie.
let's go big or go home the whole time.
100%.
And historically, when the cuts have started to happen, like, they inch towards their goal, and then at some point it just falls off a cliff. I've been advocating that for a while. Is this that point? Like, what the hell? Christmas early, let's do it. No more Scrooge Macklin. We want to see some Tiff Santa Claus over here.
Santa Claus is coming, right? Well, I mean, I always feel like I thought my 50 basis points prediction, they'll definitely do 50. I thought I was going to agree with you guys that, we'll all just say 50, but you're ahead of me again.
Reach for the stars, Sean.
I think me and him have the crystal ball, and we're just seeing 0.75, right, Vaughn?
Well, to back you guys up. So in the last 12 months, the Bank of Canada's cut interest rates by 75 basis points compared to a year ago. Inflation over that time has gone down 216 basis points to just 1.64%. So if you look at that, we're 141 basis points behind where we should be to be at neutral. So, which is about half of what you guys are predicting, or you guys are predicting 75 basis points. That gets us there faster to that neutral rate. The other piece of that is inflation should be probably closer to 3%. So we're quite a bit lower than what we should be doing. Benjamin Tal said we didn't start cut early enough.
Too high, too long, right?
Should we be now? Let's get this going here. Let's catch up. We're way behind.
Yeah, I think it's time. The predictions that I read were like that we're going to have a full percentage cut by the end of the year. So we'll cut now 50, we'll cut again in December 50. Why not do 75, then 50? Let's get ahead of this problem. We need to heat the market back up. We still have problems qualifying people for purchases that they want to make, right? Like, I think we've had this conversation before. The condo market is essentially a buyer's market, but nobody really wants to buy it because the incomes associated with that purchase price don't align in people's minds. You think if you're making 150K a year or household 150K a year, That's not a 400 square foot bachelor condo, but that's sort of the reality still. Well, interest rates are this high, so they have to come down in order to let the people that are making sort of 80 to 125K, that sort of more aligns in people's psychology with that sort of entry level condo purchase, stuff will start moving.
I'm finding a lot of people are waiting on the sideline for prices to drop. Like I'm kind of seeing the opposite side of the buyers where they're really counting on the prices. Like they have the down payment, they have the verifiable income, they're just waiting for prices to drop. And I don't think it's going to happen right away. And I think we are already at the bottom. I think we're going to just see those gradual increases. So I think if you're waiting, you're really waiting for a competition to pile. Like I think right now, we're all talking about it being a buyer's market, but it's not going to stick, be that forever.
No,
I
it's
think, the people that are waiting on the sidelines are probably their time is definitely running out.
So question, are they waiting for prices to drop on the unit that they're looking for, or are they waiting for prices to drop so they can step up a tier in what they want to buy? Does that make sense?
I have buyers who are looking to have prices drop on the unit that they're looking for.
Okay.
They're not
So
even, they're not even looking to go into a bigger place. I think, if you are looking at some 600 with the larger square feet, you are kind of waiting for the prices to drop. But a lot of them already know what they want. It's just they're waiting for that price to
So
drop.
the prices are not going to drop any further than
It's
what
not
they
going to
have.
significantly drop where you're going to like you have your mortgage from 500 to 400. Like it's going to be very small, but I guess anything helps, right? But
Especially in
it's
those
just
bigger units, which are more desirable. Like they haven't really taken the price hit. It's been really the small rental unit, foreign investor purchase,
Mhm.
for rental exclusively, that those units aren't moving. But anything a little bit bigger or anything more than one bedroom, we're not really seeing a
Mhm.
haircut on the price there. So
Mhm.
hopefully those buyers are gonna do something now if they're
Yeah.
qualified. I would guess that right now, like it's not going to get better than what it is right now in terms of
Mhm.
prices.
Mhm.
Yeah, when interest rates go down, prices go up, right? And as interest rates keep going down, and December 15th, when the mortgage rules change and people can get 30-year amortization,
Yeah.
they can qualify for more. More people will start being able to qualify for that
Yeah,
same
the
unit
competition will
they're
definitely
looking for.
increase.
Mhm.
There's no
Mhm.
doubt.
To me, it feels like the last call for the buyer's
100%.
market.
Yeah, for sure.
January is going to turn around and it's going to flip like that. And we've had really, I know they always say, the winter's slow, but we've had busy markets. The
Mhm.
springtime was slow, and that's usually our busy time.
Yeah.
So I think it's going to switch just like that, where all of a sudden there's going to be multiple bids. I still think that we have a buyer's market for
Mhm.
condos. Some
Yeah.
of those that rental stock that we have will still be a buyer's market for the foreseeable future. But anything that's priced well, has been
Mhm.
marketed correctly, and is desirable, that's going to see multiple offers in no time. And then the fear of missing out
Mhm.
keeps
It's gonna
kicking
kick
in.
in. Yeah, yeah, for sure. And I think, right now, buyers have options in terms of the type of unit that they want. Like they don't have to go with one that might require a lot of renovation. And right now, like they have so many options when it comes to the type of property that they want to buy, pricing, location. Like they can even put a condition on financing. And I think that opportunity is going to be gone by the time rates drop. And the condition of financing is such a good value on a purchase because that really gives you an additional time to think about it, really. So I
Yeah,
think
and a 75 basis point rate drop next week, as you guys are predicting, that's
mhm.
going to wake up a whole. I think 50 basis points does it, but that's going to wake up a whole lot of buyers
Yeah,
in the next week. Heading into December, maybe it gets a little slower just with the holidays.
the
But I
holidays.
think come January, like
It's
gloves
gonna
are
be
off at
different.
that point.
It's
Yeah.
gonna it's gonna heat up, especially considering that we are forecasting another rate decrease in December. So
Mhm.
if it's a full percentage point, or if it's 1.25 come January, that makes a huge difference on people's borrowing power. We're gonna creep down, once that qualifying rate gets back down to 5.25%, then it's going to be a complete, whirlwind of activity, because that will just reset where we were before. The only thing that in my mind that could slow the wheels a little bit on this is that although inflation is down, we're still in a high price environment, right? The grocery bill is still, 30% higher than it was pandemic or pre-inflation. So we still have high prices, and that's going to affect people's budget, because everything was pretty cheap before. And I don't know what we need to do to get back to a lower price environment, because the headlines seem to say, inflation's down, but prices are going to stay high. That's going to impede people's ability to spend a little bit more, or borrow a little bit more for their mortgage.
I think we continue to see that urban sprawl, people moving further away. Some of those communities that are outside maybe the traditional GTA, something a little bit further out in the Golden Horseshoe, people continue to move out there. And if you do want to be in the city, you're probably buying smaller furniture and getting used to a smaller condo, because that's what you can afford. And that's what, if you're going to make your home and that's where you want to be and you want to own, you're probably looking at a smaller property, and you've got your choice right now of what you want to buy.
I wonder with all the sort of back to work mandates, the banks are sort of calling for people in 3 days a week. I wonder if that's going to really hinder those outskirt markets, people living that may have purchased in like Stony Creek area during the pandemic, when people were like strictly working from home. They may not be looking into those areas. We may not see, price growth in those areas as a result of that, and people needing to, huddle close to the downtown core, potentially worrying about a 5-day a week back in the office mandate.
Yeah. I know they've recently mandated that, right? I'm hearing a lot of that, and I don't think a lot of people are happy about it, because I think we normalized working from home, and this is an additional change I think people have to get used to. But no, I hear you. That's a good point.
I can't go back. I can't go back to the office. No, I'm too accustomed to, being in my own house.
But
I
you're
like
so much
live in a
more
bubble.
productive, right? Like,
Oh yeah,
like,
definitely.
100%. I find I'm more productive that way. Yeah, for sure.
For sure. So lots of choices when it comes to mortgage rates. Mortgage rates are falling. Short-term fixed rates are pretty good. 5-year fixed are probably the lowest rate. If you had to give somebody, obviously there's lots of caveats to that in terms of affordability, but if you had to give, can you give blanket advice for people? And would you go out on a limb and tell people, well, this is what I would, in a bubble, this is what I would recommend? Shakila, I'm going to put you on the spot with this. What are you saying to people?
I mean, I always loved my variable, to be honest. Like, I'm a diehard fan of variable, just because if you are like somebody that's starting off your family, you're getting married, it just gives you room to move to a different location, explore your options with just very minimum penalty. And I think, prime has always been low, so I have never had that fear or need to lock into a fixed. But I definitely did kick myself for not locking into a fix when rates were at 2%. But I think variable overall has a lot of benefits, but it's not for everybody. Like, I think if you are somebody very conservative, like peace of mind that payments are going to want a budget accordingly every month, variable might not be an option, although we're in a downward trend. But you're always gonna, I guess, anxious waking up thinking what is Bank of Canada is gonna do. So I guess it all depends. But personally, I like the idea of variable because it also gives you the opportunity to lock into a fixed term. So I think me going into a fixed is just a bad marriage.
You don't want to be in a bad romance with a 5-year fixed rate.
But a
Vaughn,
3 year.
how about you?
Yeah, if you had to choose a 3-year, I mean, if you had to choose a fix, I would say 3-year fix for sure.
Yeah. Okay.
Yeah, that's sort of it's a pretty good summary. This is the toughest time right now. If you're sort of giving advice, it really has to be client focused, I think. And like really you need to just sort of lay out the options and let them pick. It's going to depend on their appetite. It's going to, because we are sort of rolling the dice a little bit, because the variable rate is still sitting higher than the fixed rate right now. Even though we're predicting, it sort of depends what we're predicting for rate cuts. But the variable discounts right now are good. And that I've said the whole time is like, look at the variable rate discount. Is it 40 basis points less than prime? That's not very good. I would probably be looking at a shorter fixed term at a higher rate than that 40 basis discount off the prime rate. 100 basis points off the prime rate. Okay, now we're talking. Because predictably within 6 months, you're going to be lower than anything available right now on a short term or a 5-year fixed rate. I don't like the 5-year fixed yet. It's creeping down, but I think I'm not going to really recommend a 5-year fixed until it gets lower than 4%.
Yeah, I'm in the same boat. I'm looking at the variable. Maybe more specifically the adjustable rate mortgage, where the payment will go down as the interest rate goes down, rather than have the actual variable rate, quote unquote, where the payment stays the same when the interest rate drops. You put more towards the principal and less towards interest. But I like the idea of getting better cash flow with an adjustable rate mortgage. The interest rate drops, the payment drops, and you can then decide how much more you want to put towards the mortgage.
Totally approve that. We've been strapped for cash for a little while, if you were in a variable rate. So I think that's definitely the solution. If you're going to go variable, is don't get that cap payment.
So
on the way up, I love the variable rate.
Are we all team variable here?
I am.
Let's talk again in December. It's right on the cusp for me, because
we're renewing a mortgage tomorrow, so we can't wait until December.
Well, you got to get your paper submitted then.
But no, it's definitely a tough position.
Vaughn's a closeted fixed rate mortgage, 5-year fixed rate every time.
No.
Yeah.
I mean, when it was 1.9, sure.
Yeah.
You didn't log in for 5
decision.
years. Yeah. It really depends on the environment.
I locked in a fixed rate at 2.39%. And then it went down though. It went down like 1.89. Like if I had just waited like a month, it would have been much lower. But I panicked and locked into 2.39. And what can you do? It still was a great rate, but I thought if only I'd waited a little bit and gone lower. So there's always that fear that you're not going to make the right decision.
Is people think that variable is the gamble, and it's really not the gamble. The gamble is the fixed rate. And you just explained it right now because, tomorrow it's a little bit less. I gambled wrong. Whereas variable rate, you're just really letting the market decide what your interest rate's going to be, with all the flexibility to break that contract if you have to.
And then also, I think over 5 years, you are going to average maybe, less than a fixed maybe. So if you had 2 high years of a rate and then the rest of the 3 years were sitting at 2%, 3%, I think overall you are going to average at the end with a lower rate.
Yeah. It's an interesting time. I guess there's never really
unprecedented times
easy choice.
Continue. I can't wait till we get back to precedented times and the variable rate is always lower.
When was that? So we've had some more new mortgage rates, I think, or mortgage rules. We keep having these changes to, the government making changes. And let me just tee up I'll tee up a slide here and be able to share it with you guys. But the newest one is that you can refinance your mortgage up to 90% of the property value. An insured mortgage, meaning that come December 15th, or I guess it would be January by the time this rule kicks in, that's up to 1.5% property value. You can go up to 90% in a mortgage as long as you're adding a rental component to the property. So as long as you're creating housing, whether that's a backyard unit or laneway suite or a basement suite, you can then take that money and do that. Let me put up the slide. I'll put up the slide in a second, but knee-jerk reaction, Vaughn, what's your take on this one?
I mean, when I first saw it, I thought, what the heck is this government doing again, pushing Canadians into further debt, potentially, letting people borrow whatever. Insured, the last 7 years, you could not refinance an insured mortgage to take out more money. You had to wait until you had at least 20% equity in the property, and that 20% equity maintained it. And that provides stability for the economy and for the housing market, because people have a lot of skin in the game. In the Toronto property, $1 million property means that you have $200,000 that you own of that property. You're not walking away from that if things go bad. It's too much money. Now, if you have $25,000 in a property and things get ugly, well, maybe you could. But then I thought about it further, and I thought, this is another nothing policy from a government that's trying to get reelected. There's really no scenario that I could see that a person with an insured mortgage, meaning they have less than $200,000 equity in their property, how much is it going to cost to renovate your property, build a laneway property, or renovate a separate entrance with a new suite into your existing property? You can't do that for under $100,000, as far as I know. So there's no money there for these people to borrow. This policy will not get used at all.
Mm-hmm. I'm on board with Juan. Like, I don't think it's going to add any value to move the needle in any direction.
Especially with building costs and labor costs. I'm like, where are you going to get a renovation? So if you have an insured mortgage, it means that you have less equity in your property than perhaps your neighbor. You're not going to be able to borrow money from your property to pay for this unit. And they also said, like, the appraised value after construction, right? So if the construction boosts your property value by $100,000, now you're able to borrow money off of a future potential appraisal. I don't even know how this is going to work. It seems like bad policy. Anyway, do you want to break it down?
No, I'm with you on this one. I know we maybe don't see eye to eye a lot on some of these policy initiatives. I think that I'll give it a 6 out of 10. I think great on initiative, great on like creating policies that will help people to be able to create more housing. I just don't think that there's going to be widespread use of it. But if you've got a property value, 1.3 million in Toronto, you've owned it since 2007, you've got lots of equity in your property. And if there's a laneway there and you want to create more value to your property, you can go up to 90% of that. Probably, you probably could do it up to 80% as well already, though, right?
Yeah, so this is what I'm wondering. So that mortgage that you're talking about on that property would not be insured, right? Like, once you have 20% equity in your property, you don't have to continue to pay for the default insurance. So if you've had it since 2007 or even 2017, odds are you have the equity. So
it's insurable though, right? So like the property value is still under 1.5 million, 1.5 or less. And you can then, it's insurable up to 90% value.
Sure, but this policy says insured, meaning default insurance, or am I reading into this wrong?
I don't know. Mortgage default insurance. So you can get it up to 90%, meaning that it's insured. They will be able to refinance it, and you would pay the insurance at that point. You still qualify because your property is less than 1.5 million and the mortgage is less than 90% or less of the property value. So it would be an insurable or an insured mortgage at that time. It qualifies for that. So I think there are people that would, more people that would qualify for it than first reaction here.
Yeah, we'd have to dig into that. I mean, if it's insurable, that's fine. But for anybody that's watching this, or tens of viewers, insurable means that your lender pays the insurance, so they're protected, but you don't have to pay for it. But
right, so you would pay for it up to 90%.
You're paying that default insurance. to protect the lender against you, which is why they're
and
able
all
to offer these
Canadians,
programs.
right? All Canadians. Like if everybody starts defaulting on their mortgages because they took too much equity and the property values go down, that affects the banking system. If everybody's defaulting, then that's bad for everybody. Having these mortgages insured means that the bank isn't going to be in trouble if everybody starts defaulting on those mortgages.
They're
Right.
just protected.
So I mean, that's it. That distinction, it was not made obvious in the policy. When Chrystia Freeland announced it, she talked about insured mortgages, not insurable mortgages, but I don't know where it falls.
I know when they rolled out the whole amortization, I think there was a lot of information that was following after the announcement. So I think we might get more clarity sort of a few months in, because I'm sure they're also figuring it out.
Right, because that's a January 15th policy. Even on the
Yeah.
December 15th policy, I think that there are more details required from our regulators, like from FSRA, and like we'll see what comes out of that. Because
Yeah.
on the back end, like in our industry, they're also making changes. You know, when we talked about the qualifying at renewal, they had to make things fair, that it couldn't just be insured mortgages, that it was all mortgages. So I think there's a ton more changes to come on the back end, and a ton more policy that we're going to have to learn about.
I like the
No,
whole conventional renewal switches. I think that's something we've been waiting, and it's just going to be a fair, play for everybody.
Yeah. No, that's one of the ones that that makes it easier to switch between lenders at renewal. You don't have to requalify at a rate 2% higher than what you did. I just put up a slide for anybody listening with all of the changes that have happened since 2020, January 2023. Canada enacted the Canada-wide foreign buyer ban. And we've had a series of changes in mortgage rules since then, essentially making things easier for people to buy. Are they doing enough still, or is there more that should be added? We've had the elimination of the stress test. We had the decrease of the down payment for purchases less than 1.5. Some people would argue that these changes are having the counter-effective rule. What's your take? Should we still be doing more? Should we be making it easier for people to buy, or are we headed in the right? And I'm trying to make this as unpolitical as possible, just from a point of view of, are these changes going to move the dial?
I think once rate come down, I think it's automatically going to fix some of the problems that we're kind of facing with affordability. Like when the RSP, limit increase came up to 60,000, I was just thinking, like, who would have 60,000 as a first-time home buyer? Who would have 60,000 in their RSP? So some are there, but I don't know if it's going to serve a lot of Canadians. But it's, I guess, a good start. But I think a lot of them maybe weren't thought out properly.
That's 100%, that accurate, that it's too many levers that they're pulling on. The only lever that we need pulling on is the interest rate, and we're moving in the right direction there. Unfortunately, it's stalled the real estate market for like 26 months now. But once that lever, they're done pulling on it, we should be just fine. They're making all kinds of policy that's future policy, right? December 15th, January 15th. By that time, we're expecting interest rates down another full percent. What kind of trouble is this going to get people into? I don't know. But this newest policy, I think, like I said, is a nothing policy anyway. I don't think anybody in the urban centers will be able to take advantage of it. And people in non-urban centers don't have this population density problem anyway. They have property available for rent, for purchase. So I just don't see this, this one really coming into play at all.
I think the decrease in the down payment for purchases up to 1.5 million, I think that was really needed here in Toronto and in Vancouver. Those markets just were becoming unrealistic for two, kind of like a nurse and a teacher, for example,
Sure,
or a police officer and a fireman, to be able to buy a property an average property in Toronto, if you didn't have the down payment, you weren't going to be able to do it. If you didn't have more than 200,000, you weren't going to be able to do it. So I just think that it opens the door for average Canadians to be able to buy average homes with a decent down payment, and not like, and without wealth, generational wealth being passed on. So I like that. I think that that's the type of thing that we need to see.
Do you think, Sean, that it's going to create more competition now in the price homes that are priced between 1.2 to 1.5? Because that's another, because that's going to also
for sure.
open another.
We've kind of been in that like 1.2 to 1.3 million, kind of like for a semi or like a detached, like in that range. I see those numbers moving up as more people can be able to afford and get into it. Without a doubt, that will happen.
Competition will spike. House prices will go up, which is fine if you're a homeowner. But if you were somebody like, my biggest grievance with it is that it's first-time home buyers only, and I'm betting that will change, because it's really unfair to people that entered the property ladder, with the condo unit that now can't sell, and their income has gone up, but because they're not a first-time home buyer, they don't get to take a crack into that market. It's completely unfair for them. Policy may change surrounding that, because like we've seen with the not having to requalify at the benchmark rate for renewals. I think we'll see change to that policy. I hope we do see changes to that policy. Otherwise, it's really unfair.
All right. Well, let's wrap there. We've been longest episode yet. Shakila, thanks so much for joining us.
Yes, thank you.
Thanks for having me. Pleasure.
Okay, we'll see you next time.